We smashed a 1 to 3.5 risk to reward on GBPUSD, and this is how you could have done it also. So first of all, we need a little bit of context as to why there was an opportunity to the downside on GBPUSD. So if we look at the entire market model here, we can actually see that we did take out the range high. We've been stuck in a relative range on GBPUSD for about the last 3 to 4 months. Okay, so we came and distributed the high. Now I utilize highs in 2 factors in my trading. I use them as my call to action to find an entry in a position, and I also use them as my targets. So I anticipate the price should go towards those levels, and that's where I would exit my position or have my take profits. Now we can see here that we'd already taken out the range high, and therefore the boundary of, or the lower boundary of this market was here at 1.25. So whilst we still had that level available, that was my ultimate target to the trend. Now we can see previously that this market had obviously been declining. We've been making videos on all the way down. You can check those out in the rest of the social media here. But you can see how market had actually left 1.25 available with this large expansion to the downside, and I was just simply looking for a correctional move to get me in and therefore then sell it back off again. As we scale the market down, we can see that we did create this sort of consolidation type range around the Asian session. We never actually took out the low. We came and traded higher first. So this is a type 1 in the Asian range strategy. I call it red panty line, where the market goes in the opposite direction to your overall sentiment. It's almost like it's drawing on liquidity. It's inducing buyers into the market only to dump them and push them back to the downside. A visual perception that I like to use is almost like a bow and arrow. You're going to pull that arrow back, draw on it before releasing it to its overall target. And that's what this market did here. So if we go into the execution side of things, we can look at the 5-minute. This is where we built this off of. You can see how the Asian range was holding. We were drawing on liquidity to the upside. We came and targeted the first area. So there was an opportunity here that I may have missed this trade, but I was quite confident in actually returning up to my level that is highlighted here on the indicator as my candle of interest. My nice little 5-minute supply zone where my last reactionary high was created before that new reactionary low. So as price did trade higher, we got up into that level. We looked to the right hand side, and I looked at the quarter theory aspect of things. We know that the market likes to respond to those big figure levels, 25s, 50s, 75s and whole numbers. And therefore 25,750 was my execution based upon where that 5-minute supply was around the Asian range, and I had a destination target of 1.2500. So a nice 1 to 3.5 risk to reward trade. We nearly hit it in the same day, but we had to wait for the second day to come into fruition and ultimately absolutely crushed to the downside. And another 1.35 risk to reward trade smash.